Hi everyone, welcome back to the Accounting and Tax Helpdesk, a podcast provided by Alamir CPAs and Associates. My name is Haas, and in this episode I'm going to talk about the forecasting, a piggyback of my last episode. As I mentioned in last episode, financial forecast is very important. Usually people look at the budget and then ignore the forecast. Budget basically is your overall end destination, but forecast is your traffic route. If you look at the traffic lights in Google Map, every 5 minutes, 10 minutes, you get the update on your road. So forecast is basic the roadmap to get to your budget destination. It's not gonna be there 100%, but it gets you there for 99% of the time. So it's very important. During forecast process, usually business owner they are ignoring the external and market factors. So, for example, if the federal government change a regulation or change the interest rate, it's gonna affect your cash outflow to the bank by the amount of interest rate they change. Or if the customer behavior change, uh, you need to account for that. So if a thread is happening somewhere in the Instagram and it's affect your industry, that behavioral change is going to affect your industry and it's going to affect your forecast. So you need to watch your forecast and your budgeting like a hawk, and if something's happening in the market, you need to be aware of that. Market is not always accurate or is not always steady. It might crash. Every few years we have a crash here in the United States. So in those violet markets, you need to be able to plan. So one thing we do at the beginning of each year is we created three-way scenarios. It's basically your best case scenario, your worst case scenario, and something in the middle. And we shoot for obviously we're gonna shoot for the best case scenario, while we're gonna be prepared for the worst case scenario. So with that, and also you need to basically roll the forecast historically and watch all the expenses that are fixed, and anything that are variable with your scenario planning you can action for it or we have a plan for it. So for example, if suddenly one of your high employee leave the company and gave you 2 week notice, it's gonna have an operation impact on you, but it's gonna have a cost effect on you too. So if you have a planning for that in your worst case scenario, you can obviously adjust your forecast accordingly and just spend a minimal time when the bad thing happen, then you can move forward and achieve your goals. So financial forecast is like a crystal ball of your cash flow. Basically it can predict what's going to happen in future with the 90% accuracy. So if you have the high season that's coming up in your way, obviously you're going to have the higher revenue and you're going to have higher cash coming into your company, but also you might have a lots of cash going out because your salary costs might increase, your inventory purchasing might increase. So the forecasting can plan that events way ahead of the time. Or if you are going to the off cycle, you might have lots of shipping costs because you might purchase inventory from the offshore and you have to pay all the shipping costs up front. So then you can plan for it. There is no revenue coming in, but you have all the costs going out. So if you don't have that crystal ball in front of you, you cannot plan for these events, and you're gonna get a bill that you're not accounted for, and you might have a mini heart attack. Over time, we need to review your forecast with the actual results. Every month, at least every month, if not every quarter, we need to sit to you, or you need to sit with your CPA and accountant and review the actual result with the forecast. And then after that meeting, you need to do a couple of actions. What was the error in your forecasting? Study those error and stop making sure you are not making the same mistake twice. The other thing is you need to create some type of KPIs. When you create a budget at the beginning of the year, you need to create the overall KPIs for all the metrics that you want to track. And at the end of each month, when you close the book, you need to calculate the same KPI and see how much they are off. Again, forecasts and budgets, they are going hand to hand, but they are not gonna tie to each other 100% of the time. So if the KPIs are in the same range, then your forecast is accurate. Although the line by line might not be accurate, but the KPI, the end result, is accurate. So if you're happy with the KPI that falls in the same range, then your forecast is accurate. However, if that's not the case, again, you need to plan for it. You need to study your mistakes and making sure your assumption is correct. Most of the time, my clients, they are excited about their business and they overestimate their revenue projection and underestimate their cost projection. So you need to be realistic, and if your forecast is not reflect the real world, you're gonna be in trouble. So having said that, most of the time business owners are visionary of their business and they are working on the business and they're super busy, so they don't have a time to deal with all these calculation and all assumptions. So you need to hire a CFO to be on your right hand. And when I said that to any person in the market, and they're all the small business owner, they freak out. They think it's gonna be a overhead cost to their cash. So there are fractional CFOs like us that can help the clients. We are not gonna be a full-time CFO for you, but we are fractional. People are retaining us to give them advice and bring the real world to the visionary influencer of the market. So we can sit with them, and please feel free to reach out, and we are happy to talk to you. So the full-time CFO is the person who's gonna be basically on your payroll. You have to pay them 100% of their salary, and they're gonna work in 100% of your time. If your company is big enough and there are lots of tasks that the CFO needs to take care of, yes, that might make sense. But if you have a small business and you don't have the full-time task for a CFO, the fractional CFO is the best way to go. Basically, you don't need to pay the salary, you don't need to pay the insurance for the CFO, you don't need to pay any of the employer tax, employee tax. Basically, you pay the flat fee, monthly flat fee that you can project accurately to the fractional CFO like us. And we have like a 20 hours a month or 40 hours a month, depends on the engagement. We can sit with you, do the forecast with you, watch your cash flow, cash inflow, basically be your advisor, a trusted advisor, let's say, and we can help you to manage the uncertain situation without panic attack. As we all know, life throws the curveballs all the time. I'm almost 4 years old and I've never seen a smooth year in my life. So life's always through the curveball. Forecast is the same thing, budgeting is the same thing. There's always a curveball. So we need to plan for that. So one thing we need to do is update the assumption on a regular basis, on a monthly or quarterly basis. Let's say in California, we just had a fire in Southern California. So that's gonna affect all the forecasting for the business owner in this area, because the rent's gonna go up because of the demands going up. In the next month forecasting, which is gonna be within the next week, we need to update our assumption for all of our clients to make sure it's accurate. The other thing is we need to shorten that forecasting review period. Usually, if you're reviewing your forecasts on a quarterly basis, now you need to review your forecast on a monthly basis, maybe, or maybe live every week, every 2 weeks, to make sure everything is accurate. You can predict the future more accurately and on time. And also, it's gonna affect your revenue. If something bad happened or something good happened, you need to be realistic on your revenue. All the business owners that lost their business during this fire in California, they lost a revenue stream. So we need to plan for that. no one predict that. We knew that's gonna happen because of the fire season in California is usually in November through January. So this fire season we already planned for it in the worst case scenario planning, but now we need to have an action item for them and basically give give our client a trustworthy advice. Thank you everyone for tuning in this week's episode. As always, it means a word to us if you like. Drop a comment and subscribe. Share the podcast with your friend. We are here to help. You can reach out to us at helpdesk@alamircpas.com. My name is Haas, and I'll see you next week.